Perfect, 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 perfect.
Hello, everybody. It's Andre J. Mcclendon. Welcome to the Andre J. Mcclendon Show. And today's video is going to be really pretty cool. It's going to be about risk-free trading, how to trade with zero risk. Okay? So I will be sharing my screen on here. Give me 1 second to turn this on. Alright. So basically, I'm going to be going on this screen showing you how to do risk-free trading. So let's jump into it. So I'm gonna do this based off of Forex, make it real easy. So if you're gonna be trading, you're gonna start with a $100 account, or let's make it easy, a $100 account. Give me 1 second. So you're gonna start with a $100 account. All right. So if you start with $100, once you hit your $100 principal. Once you hit your $100 trading, and depending on what your goals are, so if you make $5 a day, in 20 days you'll get your $100. Your account will be $200. So now, once you get your $100 account and it gets to $200, right? Once you get to that $200 mark, move this over here. Once you get to the $200 mark, now what you do is you withdraw. So you take out your $100. Alright, so you take out your $100. And what you want to do with that money is either save it, do something with it. Like I would put it into something cash flowing, 10%, 14%. I mean, it's $100, but it's the principles that matter. So once you get your $100 starting, you get it to $200 based on your goals. And then when you withdraw that money, you put that $100 into another performing asset that they can kick in every, I don't know, let's say every month. You have a monthly dividend that kicks out like 15%. So now your account balance is back to $100. And now you have a zero risk now, because what you're trading now is a risk-free account. You have nothing to lose now. If you lose your $100, now you've already taken out your $100 and you already made your money back. You already made your principal. So that's why I tell you, like, when you make a certain amount of money in your account, withdraw that amount and do something else with it. So for me, I do it about 20%. So when I make a X amount of money, I take 20% and I put it into something else. And that's how I can maintain my wealth, because if my account goes down, I didn't really lose anything. I lost some of my account, but I was only trading that big principal, but my actual cash is actually working for me. So that's how you can work for yourself, having your money work for you passively and actively. So now with your $100 account, let's put this big arrow. So now with your $100 account, you can contribute to multiple things. Alright, and this is to get you in the mindset, and that's not so much the dollar amount. It's just that if you had $1,000 to do the same thing, $10,000 to do the same thing, $100,000, I would do the same thing. It's how I train myself, and so you can put it into passive cash flow. You put it into passive cash flow, active account. So what you could do with your $100 that you take out, so you have your $100, you take it out, and you put it into either another passive cash flow account, or trade it into another account. And this is a little bit different because you got to be a sniper when you're trading so you can make the best gains. But if you found like a really good hedge, or you found another asset like cryptocurrency, like Litecoin went from like $20-something to almost $100, and you're like, hey, I have my $100, I got $200 extra or whatever, I'm gonna put $100 over here, and if it is another 5x like it did before, then I can get $500. You see? So, but with the passive cash flow, that can kick in. So and help you out. So if you have like a 25,000 and you're making an extra $4,000 a year, $3,000 a year, so it can really help out. So that's what my thing about risk-free trading. You make sure that you remove your original principal, and you spend the interest and keep the principal. And that's a very important thing. It's kind of like we'll draw the circle out right here, right? This is your initial. This is your, just say your, I don't know. So this would be starting amount, and let's say it's I don't know. Make it easier. Go back to $100. That's a real easy amount. So your starting amount's $100, right? And this is your passive cash flow. And this is how you can. This would be. Give me a second. So here's your passive cash flow. So you have your starting amount. And you just say you put 100% of it to X, any asset, dividend, stock, mutual fund, whatever, right? And it yields. Let's say it yields. I don't know. Say 15% annually, and does monthly. So you get 15% annually, but with your 15%, it pays out monthly. So you should get about $15 a year, right? So with your $15 a year, you can either A, throw that back into your original account and keep on buying more assets or buying more shares of that stock or ETF, and then you'd be like, okay, now my principal's working more and more and more. So once your cash flow hits a high enough point, you can withdraw money, start living off that money, and now you're keeping your principal and spending the interest. So let's say your interest is right here. Let's make it a circle. This is annually. Let's go with annually. It's right here. And this would be the interest, and this right here would be to say you get $15 a year. So with your $15 yearly, if you start thinking about it with a $100 account, you'd be like, okay, $100. I'm going to use this money directly to. I'm going to use this $15 directly to buy, just say McDonald's. So you kept your $100, but you spent your $15 or $10, $5, whatever amount on McDonald's, Starbucks, and you keep your principal. So you start thinking like that. You're like, okay, cool. If I keep on doing this, my principal always increases more and more in your active trading account and your passive trading account, and you reduce your risk because you withdraw the money that you initially started off with. And if you do this, you can work in tandem. So your active income is going to definitely beat your passive cash flow. That's what it should be. So I give you a good design. So we put this as a chart right here. All right. Let me move this over a little bit. And this side of the box will be right here. Will be amount. So this will be money amount. Oh. So this would be your money amount on this side of the chart, and this would be time down here. Cool. So if you put it in perspective, like on how that would look, right? Let's put the green one as active cash flow. Your active income, say it starts at $100 right about here. This one should outperform your passive cash flow. And let's put the passive cash flow right here. So we put the passive cash flow, just say it starts with a lower amount, my bad. And it's a slower curve, but it's always yielding up, and you increase and you still keep your principal. So this is how people become wealthy. You have money working for you and not you working for your money, and your principal is always increasing. Your passive cash flow increases. So once you get your passive cash flow to exceed all your liabilities, then you start setting yourself up pretty darn good. So a good example of that would be like this. Okay, so we're gonna put it as easy as, you know, you got your bill. Put this in black. You got bills. All right, easy bill would be like car payment. Okay, car payment. Utilities. You got utilities, and you got credit card payment. Cell phone, and etc., etc., etc. Right. So just imagine all this costed, I don't know, let's say $1,000. Yeah, just say all this, these 4 items just costed $1,000. So if these bills all cost $1,000, what you could do is your active trading. Let's say you get your active account to $50,000, $100,000, and you start, you know, passing over some of the cash into the passive cash flow. Once you start yielding $1,000 passive cash flow, you just hit that break-even point where you're making enough money passively just to pay off your bills, and now you're good. So when you have your job, you can just live straight off your job, or you get to a point where you increase it so you can live off the passive cash flow and it replaces your job income. So now the risk-free trading model becomes even better because you're going to be not diversifying. You'll be so much you're going to have a set plan that you're going to put passive cash flow here and here, and then your capital gains will be here and here. So you can live off your capital gains and build up your passive cash flow. I would say just find a model like this right here. It's a very basic one. Find a model where you can have passive cash flow and active. Work on your active as much as possible, but for me, I put a percentage of my income into passive cash flow and building that up every month. So guys, that's it about this video about how risk-free trading. If you have any questions, comments, concerns, please hit me up. This video is a little bit new, a little bit different. I haven't done this kind of style before, so give me your input about it. Also, if you want to find more about how to trade in the markets, go to AndreMcClendon.com, click Trade with Andre, and you can find out more. Also, please like, subscribe, drop a comment below, guys. I'd love to have a conversation about this and see what you guys think. So, guys, have a wonderful day. Thank you for tuning in this far, and I'll see you. Let me exit this out. Pause.